Quick disclaimer, this is not financial advice. Trading Forex is risky. Don't be an idiot. Use risk management. Enjoy the video. Hello traders, my name is Jamie, and if you're new here, I make videos about institutional Forex trading and smart money concepts and show you how I integrate that into my own personal trading. I had previously made a video about scalping higher time frame order blocks on lower time frames, so if you haven't seen that already, there should be a pop-up in the top right corner for it now. So in this video today, I'm going to be expanding on that by showing you a somewhat risky scalp that I took on pound dollar, aiming for a 1-to-3 risk to reward ratio that actually ran to a total of around 24R. This was our high of the day up here. So yeah, around 23.5, 24R. I understood this was a slightly riskier trade, and I will explain why. Therefore, I only risked 0.5% of my account on it, taking half the position off at 3R here for a 0.75% gain, and trailing the other half of the position behind the lows in the market. Lows that break structure, that is. So I trailed my stop to this low just here, which led to the rest of my position being taken out at around 14.5R, giving me an extra 3.5% gain, which led to a total gain of 4.25% on my account, risking only 0.5%, which I was very pleased with. So without further ado, I will clean off this chart and show you the analysis. So this is the 4-hour chart for pound US dollar, and as you can see, we have been in a strong uptrend, a strong uptrend for quite a while now, but recently we have had a pretty decent pullback. In the long term, I'm still really bullish on this pair as the British economy is starting to recover with the lockdown restrictions being lifted, and I do expect to see higher highs in the near future. So let me just point out my point of interest, which was this order block here, this last down move before we had a strong up move. Now, this order block here I considered valid for two reasons. The first reason being that before this candle, we had relative equal lows around here. So a lot of buyers at these areas, and this candle came through, pushed beneath, and absorbed all of the stop losses and liquidity beneath there. Furthermore, after the creation of the order block, we had a massive increase in bullish pressure that broke minor structure and also, where's my tool? Major structure to the upside. Consequently, I was expecting that when price returned to this area, we would see a reaction. So let me go down onto a lower time frame. So cool. Let me zoom out a bit. So towards the end of the Asian session, which is this blue range here, we had a very strong and impulsive bearish move to the downside that came down and pretty much filled the entirety of the imbalance. Now, another confluence I had for this trade that I'll just quickly mention is that over the prior couple of days, we had this area here, an area of supply, which obviously had a lot of people buying at it, placing their stop losses around this area. And just towards the end of the Asian session, we came down and smashed through all of those stop losses and absorbed the liquidity, which was just another confluence for me to expect that price was going to react bullish from this order block. So let me go down onto a lower time frame. I was formulating my idea for this scalp off of the 1-minute chart. So as you can see, price comes down, and then we start to see some bullish pressure to the upside. So price comes up, creates some structure around this level here, and then we have a bearish engulfing candle, bearish move away from it. Now, what was interesting about this for me was that we had a lot of liquidity on either side of this sort of move up in between here. We had people that were buying at this level, expecting a push to the upside, scalps to the upside, and we also had people selling at this level who were expecting the bearish pressure to continue. So after we moved away from this lower time frame structure, we then pushed up through, broke the structure, and then started to retrace back down, at which point I was looking for a trade setup. So I did actually have 2 points of interest in mind for this trade. The first one being obviously these sort of order blocks that lie in this area here, and then also this order block here. Now, why do we consider this a valid and important order block? As I said, we had a move down that absorbed liquidity beneath these lows here, and then we had an impulsive bullish move to the upside that broke lower time frame structure. I was mainly looking at this order block here for my entries. And the reason why I was more interested in this order block is because whilst these are valid order block candles, you know, we had a very strong move to the upside, they are in reality, if my trading view will load. Has anyone else's trading view been doing this recently? I switched time frames and then all of a sudden all of my drawings just disappeared. It's really annoying. But anyway, the final down candles that were located down here are a part of this final 15-minute order block that obviously absorbed all of the liquidity beneath here and also the liquidity beneath here. So in the future, I do expect them to be mitigated and hopefully get a reaction off them. But as we are scalping on the 1-minute chart and using 1-minute structure, and my drawings are back, don't understand that at all. But yeah, as we are using 1-minute structure to formulate our trade ideas, I considered this a more valid order block because we absorbed the liquidity here and then we broke lower time frame structure to the upside. I did still understand that this was a slightly riskier point of interest as price could very well come down and smash through here, mitigate these final down moves down here and then go to the upside. Hence why I only risked half a percent of my account on this trade, whereas I would normally be risking 1%. So in terms of entries from this, you could be risk averse, placing your entry at the open of the order block with your stop down here at the low, targeting a 1 to 3, which is what I like to target for my scalping, which again, only asking for 12 pips out of the market, so it seems pretty probable. This is a perfectly fine setup. You've got a really nice small stop loss. Great, perfect, nothing wrong with it. I decided to look and see if I could refine my entry any further though. So when I'm looking for buy positions, I like to take a fib of the range. So from the short-term swing low to the short-term swing high, just up here. And I only really want to be looking for buy entries at the 50% level or below. So what I noticed was obviously the 50% and the 61.8 both lined up nicely with our order block here. And furthermore, we have an imbalance between the wick of this candle here and the wick of this candle here. The fill of this imbalance lines up really perfectly with the 0.5 fib level. If you want any videos explaining imbalance and things like that, just pop me a comment in the pop me a comment in the comments box below. So I decided to place my entry at the 50% fib level, roughly around here, and my stop loss at the low here, understanding that if we did break beneath this low, it's pretty likely that we were going to come down to mitigate these order blocks. So this meant that my 1 to 3 risk target ended up being, let me just refine that a little bit more, ended up being here, which I was really happy with. You know, we're looking at just above these sort of highs here, which also quite handily was effectively relative equal highs. So we had a lot of liquidity resting above here, as we can see, as price moved quite impulsively away from it. So I was very happy with this. As I said, this is a riskier trade idea, but you have to remember when you're scalping, especially on the 1-minute chart, only asking for here 8.7 pips out of the market, it sort of, for me, it feels like it increases the probability. I'm not asking for a super crazy long-term 200 pip move. I just want 8.7 pips out of the market for a nice 1 to 3 risk to reward ratio. Furthermore, I was pretty confident in this trade, obviously wanting to take the liquidity above these highs here, and we did have lots of imbalance, lots of gaps from where we had the final bearish push down towards the end of the Asian session. So for me, I was pretty confident that if we got triggered into the trade and we didn't break our stop, then this 1 to 3 target would be very achievable. So price comes down, there we go, and we get wicked in. Get wicked into our entry. So as you can see, we do have a pretty impulsive move up from it. Price then sort of ranges a little bit for a couple minutes, again just sort of wicking into the entry, but never, just about closing beneath our entry, but never hitting our stop loss basically. We then start to see some upside and we get some really impulsive bullish moves up, and our take profit is hit for a 1-to-3 risk to reward ratio. The duration of this trade was only 15 minutes, which was really great. So, as you can see, I hope I sort of explained it well enough if you can sort of understand my thought process. You have to remember that all of these setups are going to look different. None of them are going to be picture perfect. What you really have to do is take a step back and think about what price action is showing you, what the market is displaying to you. You know, I was confident that this was a valid order block because of the grab of liquidity and because of the break of structure. And that, coupled with the fact I was only looking for a short-term move, made this a valid trade idea for me. I am sorry if I have made this sound at all confusing. If you have any questions, anything you'd like me to elaborate on, or if you'd like me to create some kind of like strategy framework video that you guys can follow and backtest, then do let me know in the comments below. As I said previously, in my previous order block scalping video, I like to take off half my position at 1-to-3, which just secures some nice profits for me, and then leave the rest of my position to run. Again, see, it just all disappears. Really confusing. So strange. Well, I'll put my entry back on there. So, understanding that price could literally fly up from here and not come back to mitigate these lower order blocks for ages, or the price could have a slightly extended move up before then coming back down. But for me, I like to secure some profits, but also have the confidence of knowing that if a bigger move is happening, I'm not going to miss out on it by closing off all of my position at a set risk to reward target. Sorry to cut you off there, my recording software crashed, which was very annoying, but I did just want to finish up this video with a quick note about trailing your stops. Now, for the rest of my position that I trail, I like to trail it behind lows in the market that break structure, and I prefer to do this on a slightly higher time frame than the 1 minute, just to provide a little bit of extra security. For example, on this one, I did it on the 5-minute chart. So what I like to do is just trail the stop to any low that is confirmed by breaking structure to the upside. So we create this low here, and it breaks this structure here to the upside. Same with this one and this one. That one breaks the structure to here, and this one breaks the structure to here. Now, if I'd left it there, because we didn't really get a structure break above here to move this stop loss higher, I would have been stopped out here at around 5.5 R. However, as this was a Friday trade, we were coming towards the end of the week. I didn't really want to be sat on my computer on a Friday evening, quite honestly, trailing the rest of the trade. So when we came up here and we had this really strong wick to the downside, I did move my stop loss to just below this wick, understanding that price action doesn't really do a whole load at the end of the day on a Friday. So I was quite happy to secure my profits at that level if we broke below it. Again, you have to use your sort of discretion in this. Obviously, this is a big impulsive move up. If you wanted to secure more of the profits, then it's a good idea to move your stop up. But again, understanding that price may come down, not break this low, and then shoot to the upside. You know what I'm trying to say. Use your own due discretion when trailing your stops. If it's a Friday evening, secure your profits is my best advice, because I ain't about holding trades over the weekend. So anyway, just to finish up, I hope that you found this video useful, and I hope I haven't been too confusing. I'm still not the best at explaining things, but I'm getting better at it slowly but surely, I think. So if you have any questions, or if there's anything that you'd like me to elaborate on, please leave something in the comments box down below, and I will endeavour to get that done for you. So thank you for watching. If you enjoyed this, please leave a like and a subscribe. It would make my day, and hopefully I'll catch you in another video very soon.